Ladies and gentlemen, Greg Mikulowski from ForexLive.com. Today's date is November 21, 2023. This is a Kickstart video where we take a look at three of the major currency pairs, the Euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. Looking at those three currency pairs, the dollar versus yen is definitely the biggest mover with a 127 pip trading range today. That compares to 107 pips over the last 22 trading days. The euro versus US dollar is the least mover with a 28 pip trading range, only 28 pips. The average over the last 22 trading days, about a month of trading, is 75 pips. The sterling versus US dollar is trading with a 64 pip trading range versus 95, the 22-day average. So let's start off by taking a look at the euro versus US dollar, the least mover of the major currency pairs. And if we take a look at the daily chart first, we did extend to the upside in trading here today, and that move to the upside did take the price up to and through briefly the 61.8% retracement at 1.09599. The high price for the day reached 1.0964, so we got about 5 pips above that level and then rotated back to the downside. We are trading near lows for the day. If you take a look at the hourly chart, the price action or the start of the day, so the price open at 1.09364, and we're currently trading just above that at 1.0939 after reaching a low of this current hourly bar around 38. In fact, the last 3 or so hours has seen the low right at that 38 level. So there is somewhat of a floor, little intraday floor being developed there. But the price action still is relatively narrow. What does that mean? That means that with only a 28 or so pip trading range for the day, that there is room to roam. Again, the average over the last 22 days has been 75 pips. So 28 pips, 75 pips. Today's range is only 37% of what is average. So that means there's room to roam if the price should extend either to the upside or to the downside. Obviously, the price action recently has been to the upside. Trading on Friday, the price moved away from the 50% midpoint of the move down from the high price for the year that was occurred in July to the low price of the year, which occurred in October. Moving above that 50% retracement level was a more bullish bias here. So the buyers are trying to take control, but we do need to get above the 61.8 and stay above. That's our next key target here. On the downside, if we should move and make new lows and then get below the 1.09255 level, that's the low of this swing area. There's a number of different swing lows and swing highs coming in this area, going back in time. If we get below that level, that would open up the door for further selling, I would expect, and we should see some momentum to the downside on the failure of the break above the 61.8% retracement. So look for a break below the 25 level to increase the momentum with a potential move down toward the 50% retracement of 1.08618. Now, I said the dollar versus yen was the biggest mover, and on the daily chart, we are seeing another fairly decent day to the downside. This has been 1, 2, 3, 4 straight days to the downside, and 5 of the last 6 trading days has been to the downside since we reached this high right here at 151.90. That got within 3 pips of going back in time. This high price going back to 2022. This high right here was a 31-year high. This is a 32-year high. Or a 30. If we would have broken above that level, it would have been a 32-year high, but it was not meant to be. So we have a double top, and we've seen the price move sharply to the downside. Now, the low price in trading here today did reach the next target level that we talked about in trading yesterday. That was at 147.26. As you can see, we moved just a little bit below that level. And below that comes the 100-day moving average. That level comes in at 146.56. We haven't been below the 100-day moving average since going all the way back to this day right here in April of 2022. The last time since the price tested the 100-hour moving average both here and here, we found buyers against that level that push the price sharply to the upside. So this 100-day moving average is going to be key barometer for today and going forward. If the price is able to get below that level and stay below that level, it would open the door for further downside momentum. Right now, we just got to the low prices from here, from the month of October and then mid-September here. So we are seeing a little bit of a bounce off of that level. What we watch in the short term here is these lows right through here. This was a low price from the month of October. Actually, it wasn't the low price from October. This was the low from October, but this was the October, I don't know, mid-October low, and then we had the low from yesterday's trading, which came down to that level and found support buyers. So getting back above the 148.15 level, and then above this low right here at 148.68 would increase the bullish bias for the dollar versus yen. You need to get above those levels to increase the bullish bias. Absent that, and the sellers are still in control in this currency pair. So watch that level 148.15. Watch 147.26 on the downside, and then the 100-day moving average. Finally, let's take a look at the sterling versus US dollar. And in trading yesterday, we moved to and through the 100-day moving average, but it could not close above it. We closed right near it, however. And in trading here today, we have moved above that level, breaking above the 125.04 level. That 100-day moving average is now going to be a risk-defining level for traders. As long as the price can remain above that level, the bias remains more to the upside. And on the daily chart, we'll look toward the 125.98 level up to 126.79. That's a pretty wide swatch there, but basically about the 126 level is our next target on the top side off of this daily chart chart in the sterling versus US dollar. Take a look at the 4-hour chart. Here's the move above the 100-day moving average in trading here today. Steady, and we also moved above this swing area at 125.24 to 47. But as you can see, the price has moved back within this swing area. Swing area defined by different swing lows and highs going back in time through here, move below that level, and then use the level as resistance here before moving to the downside. So getting above that level should have been more positive, seeing the price move up toward the 50% retracement. We're still going to keep the hopes up now that we've broken above the 100-day moving average that this area finds support in here, and we find the oomph to get up to the 50% retracement level. If we get above the 50% retracement, that level, that'll open the door for further upside in sterling versus US dollar. So there you have it. Kickstart video for your day with a look at 3 of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.